Good afternoon, everybody. I trust that you are well. Here with the comments that I promised you as per my previous video and email on the 3 attachments that was attached to that last email, which is basically the draft documents on Britannic Opportunities Ltd 2. Very briefly, this is the fun fact sheet that I sent to you quarterly. You will notice right at the end they've added in this extra table where they are going to show you at each lock-in date what the index level of the FTSE 100 was and what the running average is going to be. Remember, this just needs to end on 0.01% positive. In other words, the average of these values must just equate to 6,824 points, 0.51. If we basically move to the frequently asked questions, I'm going to run through this very briefly. A lot of the information is repeated in the 2 documents. 3.8-year investment, split it between the 3 indices in those weightings. These weightings represent a 97% correlation to the MSCI World Index. MSCI World Index is 23 developed markets combined. They just state again that they give you principal protection. In other words, the market risk has been hedged out. So if the market or the weighted average of these markets go down, you will not lose any money, as your principal is preserved in US dollars plus a minimum return of 3%. Having said that, you do take credit risk on First Rand and ABSA. And it will be their respective US dollar subordinated debt with a minimum 30% exposure to either First Rand or ABSA and a maximum of 70% exposure to either. But as I have showed in my previous video, from a risk point of view, both First Rand and ABSA are safer than the current Investec credit risk that we took. So if you invest in this, you definitely have to be comfortable with First Rand and with ABSA. The return potential, it's a maximum of 34%. And how do they get to that? It's basically a 200% participation on the growth of the basket's performance from the 3 to 18.5%. The 3 being the minimum that they return, the minimum return that they guarantee. So 18.5% less the 3 gives you 15.5. Times 2 is 31, and if you add the guaranteed 3 to that, it gives you a maximum of 34. This equates to an annualized return of 8% per annum. I did the calculation over 44 months and I got 8.28% internal rate of return. As you all know, our shares are currently in pounds, and that will remain in pounds, even though the total investment will shift over to dollars. And new investors coming in for the first time will have to subscribe to the B class shares, which will be the US dollar shares. This is just a graphical explanation of how the share works. This is the return of Britannic Opportunities on the left hand side, and this blue line represents the basket of indices return. So what they're illustrating here is if the basket yields a negative return, in this case a negative 30, you will get your 103 guaranteed. If the basket yields a positive return, you will also get a positive return, and you're going to get a geared return up to the 34%, where our return basically flattens out. If you have a look at that, 34 is the maximum that you can do. So any outperformance above 34, we are not going to participate in. And just remember, we are getting the 34 once the market hits 18.5%. Because we have the double gearing between 18.5 and 103. So in actual fact, If the market does anything more than 18.5%, well, if it does 18, we're already going to be on the 34, and should the market then at some point do more than 34, we will forfeit that upside. Having said that, the value of the 100% principal protection we'll have a look at just now. So if you look at it in a table format, these are just 5 different examples that they've given. If this is the initial level of the basket, 100, and it falls 20%, we will get 103 from the bond that we're going to be buying. The options value will then just be 0. So I've made it A, B, and C, and A plus B equals C. Can maybe just add that in there. So if the markets are down 5%, it will yield a -5, and we will still get the 103, as this negative value just becomes 0. So the value of the option will just be 0 for us. If the market does a positive 10, the bond will remain at 103, and if we work out what the total share will be worth, it's the 10% positive less the 3 is 7, times 2 is 14, and then the 14 plus the 103 will give us the 117. Next example is basically where we will cap out, or our maximum scenario, where the market yields 18.5%. So 18.5 less the 3 is 15.5, times 2 is the 31, and the 31 plus the 103 equates to 134. Just showing here that if the market does 40%, we will only get the 31 plus the 103, meaning the 134. This little graph just basically shows you that if you have a look at what is the best asset class to invest in between equities, bonds, and cash over the last 116 years, it's pretty apparent that equity by far has been the best asset class to invest in, and going forward it will remain the best asset class to invest in. The call date of the bond is 3.8 years. Having said that, should the Reserve Bank for any reason feel that both FirstRand or ABSA are not complying with their Basel III, or might be Basel IV at the time, covenants, the Reserve Bank can force them not to call on the bond. The chance of this is, in my opinion, 0.0001%, as both FirstRand and ABSA have very good ratios, and it's expensive debt for the banks, so they will call it at the first possible opportunity that they get. Rand hedge, just to say that this investment is in dollars, so you can view it as a Rand hedge against compared to your existing portfolios. Regular valuation at prices daily, you can get it on Bloomberg, or you can get it from Praxis's website. Liquidity, willing buyer, willing seller, and subject to Investec's capacity to buy shares back from the company. This is currently sitting at about 60 million. Not sure how this will play out going forward, but currently they can buy shares back if there's no willing buyer, willing seller, up to amounts of about 60 million. This is just to show the value of the 3% minimum positive return at expiry. If you have a look at these developed world indices, since inception of the indices, and this just tells you how many years is included in that sample. For example, the S&P 500 has been in existence for over the last 30 years, and the worst performance that it yielded over a 3.8 year term was minus 35%, and that was during the period from 1999 to 2003. You can see the Nikkei did minus 44, the Eurostoxx minus 48, the Dow minus 26, the MSCI All Country, which is 23 developed and 24 emerging markets, did a minus 40, and the MSCI World, which is just the developed markets over the last 50 years, the worst period yielded a minus 37. So what they're just trying to illustrate here is that should this occur again, you will dodge this bullet and you will take a 0% loss. In actual fact, you will receive a positive 3% return. Just from a disclosure point of view, remember that even though the structured product utilizes indices underlying, we do not receive the dividends of the indices. So they've taken the historical average of 2.38 less a tracking fee, which was the yield net of fees less tax. So the net dividend per annum would be around about 1.35%. If you compound that over 3.8 years, you get the 5.23%. Here they're just comparing the MSCI World payoff versus potential Britannic payoff. So they've taken since 1988, what has the MSCI World yielded, and just basically showed you from current levels, if they multiply the current levels by 1.03, that is what you will get, and if the maximum return that you will be able to get is basically represented by the green line. Also, should the index basically fall here, always remember that we can sell at any point here and go and buy the live market, which is basically what they've explained on the next slide. This is one of the 8 shares that they have listed over the past 18 years. And you can see this was done in March 2007, and it shows what happened during the global financial crisis. The market basically fell 55%, and the most that this share was down was minus 10%. So what they're just trying to illustrate here is, should this happen in a Britannic Opportunities environment, let's say over the next 3.8 years the market for some reason falls by 50%, we can sell out of Britannic at a possible minus 10% and go and buy the market at minus 55, as you always want to enter the market at these bottom periods, but it's impossible to call when the next bottom period will take place. This is just to basically explain how are they able to provide this 200% gearing, and this just basically states that the volatilities has come down quite a bit compared to 10 years ago. This is the S&P 500, that's the Eurostoxx 50, and that's the Nikkei 225. You'll see the volatilities and all of them have come down. This is just to say, this is nobody's view. This is if you buy the rand, if you want to fix the rand to the dollar and you buy the forward rate, what is the anticipated currency depreciation? It comes in at about 22.5%. PSG and myself do not necessarily share this view. We think that the rand is currently undervalued, so we do not think that it will depreciate by 22.5% or 22.25%. So the reason you should buy this is not to only look at currency. You should buy this because it gives you an opportunity to invest in offshore companies, and because it gives you capital protection whilst giving you the potential equity upside. Fees, once again, I do not charge any upfront fees. Ongoing fees, all fees are priced into the par value of the share. In other words, you're not going to pay me any fee during the 3.8 years. All the fees payable will be paid from the Guernsey company to the distributor being Investec, the investment advisor being me, and the administrator being Praxis to run the company. If you add this together, you get to 1.33%. It's theoretical, but if you want to compare it to your other investment, to your effective annual charge, very, very low, very, very cheap investment. Okay, and that is it from the frequently asked questions. If we go to the brochure, and once again, like I said, there's been a lot of duplication between the two, so I'm going to go through this very, very quickly. That we have discussed. Company will be incorporated in Guernsey, listed in Bermuda. It's sub-debt. Just keep in mind it's not as safe as cash or senior debt being bonds, but it's definitely safer than owning the equity. We've run through this example. I see that they forgot to put a minus in there. That we've covered. Risk factors. This may be something that you should pay attention to. If you're a new investor and you want to convert your rands to dollars to invest, there's obviously exchange rate risk that you have to keep into account. Yeah. Tax, obviously, I mean, there can be changes in the tax status quo. Currently, there are no tax in Guernsey, and the company has a tax exemption certificate. So the company will be making all the profit, and because there are no tax in Guernsey, there will be zero tax payable on any profits, and that will enable us to lock in the growth and roll it for a further period. If you have a look at how can you invest, you can make use of your offshore allowances. There are two allowances, your foreign investment allowance and your single discretionary allowance. Single discretionary allowance, you can invest up to 1 million without getting a clearance certificate from SARS. You can basically just fill in a one-pager with your local bank, and they'll be able to convert your rands to dollars and send it over to Praxis. If you want to take more than 1 million, you would have to apply for a tax clearance certificate from SARS, and you can take up to 10 million per registered taxpayer. If you have any assets offshore already that you have disclosed in terms of amnesty assets, you can utilize those. And if you want to take more than 10 million, or your taxes are not in order but you want to take more than 1 million, we can do it by way of asset swap. The pricing of an asset swap is about 0.3% per annum. So if the rand depreciates by more than 0.3% per annum, it is worth paying for the asset swap. And that is it. If you have any questions, please do not hesitate to contact me. Have a great evening. Cheers. Bye.